you about the Bitcoin VEPS. Specifically, what are the indications showing? So if you want to just watch this first few seconds and skip away to another video, that's fine. But if you want more details, stick around as I'll give you the details. At the moment, the daily time frame of Bitcoin is looking very much to the upside. There you go. That's your quick summary. Now, if you want to go away, just be kind and click a like or a share or leave a comment. That'd be great. And obviously subscribe because it helps with the algos, as you know. And hopefully this information is useful to you in your trading. And cheers. For those of you who want to stick around and hear more details, there you go. The volatility of Bitcoin and the correlations of the volatility to the price action are all indicating price go up today. Why is that? That's because all of the lengths of the volatility that I track anyway, the typical ones that I look at, short length, medium length, and long length, are all negative. They're all, almost fully contracted and sloping down from yesterday and previous days. And correlations are all significantly negative, also sloping down or flat, but significantly negative or nearly flat. They're really all sloping down. And what that means when you have negative correlation with, or contracting correlation, contracting volatility with contracting correlation, you're going to have price go up. You're also seeing that on the variance, and you're also seeing that with the direction predictors on entropy. And entropy is also on a full random walk with ever so slight negative correlation that's increasing. So that's very similar to, because the entropy has been contracting for some days, so that is very similar to negative correlation on negative volatility. It's basically indicating price go up. That's some of the details there that you need. You also need to see that the Bitcoin asset is currently in a mean reversion, very probably on the daily time frame, to the 3012 RMLR. Currently, that's up at around 65K. The asset is really close to or already at the 3012 power mean. I'm sorry, the 30 length power mean. It's moving like 10 on the daily time frame. So those power means are very strong. If it fails to close above the power mean on the day, it can certainly yield more negative returns. If it closes above the power mean today and then opens and closes tomorrow, Saturday, the 24th of August, above the power mean, that'll be great. Once it does that, then Sunday's probabilities of positive returns increase. And once you got that going on, a couple of days of positive returns, the probabilities are significantly increased. Of course, that'll be over a weekend. So if you have a dramatic move to the upside over the weekend, there's a pretty good probability that you'll have some kind of a pullback on Monday before the next actions, which could be to the upside very quickly. So you could have something like, a little run up over the weekend, pull back on Monday morning when traditional markets open, or before then, and then a further run up. It all really depends on what happens today, over the weekend. And time will tell where this actually leads us regarding that information. Why do we use the VEPS information? Well, because it's leading information. Why do we care about using leading information? Because leading information is what the high frequency trading firms use in order to actually control the markets. And when I say control the markets, I mean they literally run 80% or more on average of the trades on the markets especially at this time of year when a lot of people are on vacation. And that means that up to 20% of the people who are typically, 20% of the orders on the markets are not running right now. It's actually slightly less because not everyone is on vacation, obviously. But typically the markets are roughly 20% retail traders in terms of orders and 80% bots. So it's actually even more than that, but whatever. The 80-20 rule in that sense is good enough on average. So what does that mean? Well, that means that the bots are basically involved in a circle jerk of cannibalizing each other's money bags while the retailers or the retail traders are away. And that means that there's a limited amount of liquidity and a thinner and thinner amount of Bitcoin available, as I've explained. Big bags and whales, central financial institutions and governments are buying hundreds of thousands of Bitcoin every month. And at this point, they're acquiring them from retail traders on exchanges. And yes, that means you, if you're trading on an exchange, you are their target. And if you think they're not going to use all their leading information against you just because you have a relatively small account, well, you're wrong. The average liquidation is around 3K. And that is because a typical account size is between $3,000 and $5,000 for a new account. And typically those accounts get drained and either liquidated or they lose 90% of their trading capital and they pull out the remaining 10% and leave the game within a few months. And given that most people use insane leverage positions, it happens more within like 60 days than 90. Anyway, that's the long and short of it, so to speak. So if you're trading Bitcoin today, yes, indications are to the upside on the daily at the moment. But as usual, as we saw yesterday, when daily indications were to the upside at the start of the day, we saw, as I said, that might change based on what happens on lower time frames, and indeed it did. Right? Indications were to the upside at the start of the day, and by the middle or end of the day, they were to the downside. And that's in fact what happened. The daily candle ended down because of the changes on the lower time frames that happened. So we saw a close to the downside. Is that likely to repeat today? Well, time will tell.